All right. Hello, all, and thank you for joining us for the episode number 2 of our Stonebridge Wealth Planning Series. My name is Patrick Kincaid. I'm the Director of Marketing at Stonebridge. Today, our guest speaker is Mark Brown. He'll be discussing asset protection strategies when planning your estate. Mark is Vice President of Aon Private Risk Management and has been partnered with Stonebridge in working with quite a few of our clients on their own asset protection strategies. With that, Mark, I'm going to send it over to you, and I'm going to pin your video here so everybody can see you.
Oh, wonderful. Did I comb my hair right?
Looks good.
You know, COVID now, I actually put a dress shirt on for the first time in a while. Nope.
Yeah.
So,
Mark, you still there?
Yeah, I'm here. All I can see is on my screen just says Stonebridge.
Yep. You are the pinned video, so you are all set to go. Yep.
All right. Hey, I want to just take a minute and thank everybody at Stonebridge for giving me the opportunity to chat with everybody. Thank you for your time today. My role in estate planning, I've been doing private risk management, personal insurance for affluent people for about the last 24 years. I've been at Aon closing in on 20 years. And for the most part, I like to tell you, I've seen just about anything and everything that goes on in this marketplace. But, we're going into some really uncharted times. I just want to give everybody just sort of a quick market update of what's going on in the personal insurance market first, just so you guys can see. I think it's real important for you to know. In the personal lines marketplace right now, you can read every single day in the newspaper. You can read about hurricanes, as we've got one right now down in Central America. Doesn't look like that one's going to get to the United States, so that's a good thing. You know, the last one was way more of a tropical storm, but those storms go through and they cause damage. Hurricane damage, then you don't need to look very far to California, and you could see wildfire damage. What people don't really understand is that when a home gets wildfire damage, let's say it's insured for $1 million, it's probably closer to an $8-9 million loss to the insurance company, maybe more, because it's the timeline to get a home rebuilt, the cost of materials going on. People have to live temporarily. It's just an accumulation of an effect. The other thing that is going on throughout the country is water losses. The insurance companies are telling us that 40% more of their losses are due to, sewer backup, water leaks, shower heads cracking, anything along those lines. Most insurance companies now are even getting to the point of requiring water detection systems to be installed, just like a security system. These systems go down and sort of by your main water valve, and as they set sensors in the house by toilets, sink areas, if it senses water, it shuts the water main off to cut losses. It's actually proven over time to be a great tool for just to stop the loss and to limit the loss. The other thing that's really been going on in the Midwest, which I think is way more relevant to everybody, is roofing claims. If you've lived in Minnesota the last couple of years, we've had real bad hail, nasty storms go through the Midwest here, and insurance companies are raising rates. I'll come to this. If for your own thing, you have to make sure you're looking at your personal insurance renewals. Car insurance, jewelry insurance, homeowners insurance are all going up. Car insurance maybe 6 to 10%. Homeowners insurance is going up in some cases 20 to 25% year over year. And that is a really, really big increase. Not telling you can offset it, but I'm just letting you know you have to be aware of what's going on and have to take the opportunity possibly to review what your current coverages are. All of those losses around the country, I talked about hurricanes, wildfire, water damage, roofing damage. The personal insurance markets are just hemorrhaging rates, and they're going to raise rates. I'm seeing it with my clients the last 12 months. We're delivering anywhere from an average of 8 to 10% to 28 to 30% on an overall package increase. And those calls don't usually go very well, but we're out in front of it. We're talking to our clients about it. And they don't understand. They don't understand. We do take them to the market, take a look at those things. And eventually we get through it. So what all that has done when you're reviewing your program and how it's important in your estate planning is obviously your home value is a very important part, your jewelry, your art, things of that nature. Appraisals. If you're concerned about the value of your jewelry, you need updated appraisals when it comes to your estate plan. Things that carriers are doing, maybe not always taking as much rate, but they're changing your roof, the way they insure your roofs. So go back to this whole thing where we need to be reviewing our current coverages. You need to make sure you're sitting down with your agent or having a conversation with your agent about how they insure your roof. If you have a cedar shake roof in the Midwest, you're seeing roofing deductibles anywhere from 1% or 2% up to 5% of the home value. So if your home is insured for, say, $1 million, you're looking at anywhere from a $10,000 to $50,000 deductible for your roof. Most clients don't know that until it's too late and they have a claim, and then of course they're upset. I've seen one carrier do this. I think a few more will. As the house's roof is aging, they will put a replacement cost on your roof, and it will start to depreciate over the years. So say a roof is 15 years old. We all know it's starting to get older. We all look for that hailstorm to go through our neighborhood so we can get a new roof. The reality is the insurance companies, and this one in particular, starts coming in at 90%, 85%. So what is, say, $50,000 becomes a $45,000 claim or a $40,000 claim. They just won't pay the full value of the roof as it gets older. It's ways the insurance companies are offsetting their risks when exposed to an older roof. The other thing that's changing a lot in personal insurance is cyber. And it's cyber to the good. I mean, there's more online fraud, there's banking theft, there's credit card theft, there's cyberbullying. Most insurance companies now are coming out with endorsements that you can purchase to buy some cyber coverage for yourself. Some companies, it's very reasonable. I know I'm with Pure myself. It's a $100 endorsement for $100,000 of the coverage. I jumped at it when it came out. Just the concept of somebody breaking into our bank accounts or our investment accounts, something along that lines, gives me peace of mind that there's some coverage for that. And I talk about all this because, I said it earlier, it goes into your estate plan. For those of you that put your properties into trust, or maybe you put your vacation homes into trust, you maybe put your vacation home into a family partnership or an LLC, you expose the asset, obviously, to limited insurance coverage. So you need to make sure you're understanding that you have the right coverage that you want in place at the right price. If you put your properties into trust, or you put your art into trust, or your jewelry into trust, make sure that those trusts are showing up on your personal insurance policies. Most insurance companies will do this. They will do it as an additional interest for you. That'll give that trust coverage at that location, and that'll allow the coverages to flow up through your umbrella, which is sort of my next conversation. Is when it comes to your umbrella, you need to make sure, A, you have one. B, you can't ever buy enough limit in your umbrella, 5, 10, 15 million, to protect yourself. And obviously, if you put your estate plan into your property, into your estate plan, you're protecting your estate from somebody going after it. Keep in mind, when you get sued for a dog bite, or somebody trips and falls at your property, they're not suing you. It comes across as they're suing you. But what they're really doing is suing your insurance company and your umbrella, and that limit is set in place to protect you before they can ever get to a single asset that you have. That's really a quick sort of 10-minute review of the program, of what is out there. It's really, really, and I can't stress this enough. I've told Bob this, I've told Patrick this, I've told Ron this. You've got to make sure you're reviewing your programs, because what you don't want to know is find out next summer there's a storm and you get a huge hail deductible, or you've got a limited replacement cost on your roof, or you're in Florida, or here's the other thing too. When it comes to your estate plan and you've changed your state residency to your vacation home in Florida or Nevada or Arizona or California, you have to change your primary policies to reflect that. So your main home becomes Florida. Your jewelry and art goes to be insured in Florida. Your umbrella rate goes to Florida. Your cars have coverage in Florida. And that becomes important from an estate planning perspective as well. So that, Patrick, really, was my 10-minute overview. I think we set aside 20 minutes. I wanted to make sure I got plenty of time to answer anybody's questions about myself. I'll throw out there to everybody that's on this call. I am 1,000,000% happy to review your coverages for you with Stonebridge. I'm not here to sell you anything. I'll give you or them an executive summary of what I see, things you need to be aware of. I can tell, for the most part, I've been doing this for 24 years, that I can tell you where you're at as far as market rate goes. One other thing, I guess, before Patrick, you open it up, is losses. For everybody on this call, every claim that you make in the insurance marketplace counts against you, whether it's glass, whether it's a ding, whether it's, roof, a shingle, things like that, hail, water. And I say that because when you're with your existing company, it probably doesn't overly impact your rate today. But if you try to start to move, and let's say, for example, you've got 3 or 4 glass claims in the last 5 years, that will actually impact your ability to shop your coverage. People don't, well, it doesn't count against me. Yeah, it does. It does count against you when you go to the market, because they will look at your claim history and they may not even offer you terms. So we tell our clients that it's very important, before you file a claim, you're having a conversation with your agent about, should I or shouldn't I file a claim? We encourage our clients to take higher deductibles on cars and on houses, $2,500, $5,000 deductibles, so that they're not turning in a nuisance claim and trying to look at their insurance from a catastrophic standpoint. So, Patrick, that's what I have. I'm would be thrilled to answer anybody's questions, comments, and go from there.
Yeah, certainly. Thank you, Mark. We really do appreciate it. I will say we do have some time here, about 5 minutes or so, available for questions. If you do have questions for Mark, please go into the chat functionality and type your question in, and we will take a look at those, and Mark can answer them. So we'll wait a couple minutes here in case people have questions. Mark, I guess I do have a question. Is there anything that people should be prepared for as we enter the winter here? Obviously, we got cold weather coming in. We'll see what the snow looks like in the cold. But is there anything from an insurance standpoint that you recommend during this season people should be preparing for?
I go back to the roofs, Patrick. I guess my home's 20 years old now, but I've had one troubled spot in my house with ice dams. It's over my garage. So when I have had a problem with it, it hasn't been something I've ever considered turning in. We patch it together. But ice dams, boy, I'll tell you, they can do some serious damage inside of a house. Mm-hmm. And if you get them, to try to remedy something, it might be a little late now in the game, but to try and remedy to get those things off your home, or put some kind of a heated roof system in to limit that, because that water will get into the home. It'll get under the shingles. It'll get into the attic. It eventually comes into the house. And then eventually you have a bigger claim than you realize. Mm-hmm. I'll go back to one other thing while we're waiting to see if we get some questions here. Is talked about the water detection system. Insurance companies will tell you that they are seeing more and more and more claims from broken washer hoses, broken ice machine lines, things like that, things that you wouldn't necessarily see but recognize right away. It'd be a long-term effect. Insurance companies are actually helping our clients pay for those water detection devices. So in most cases, it's up to $2,500 they'll give you as a credit to put those systems into your home. I think it's a great deal. If clients are willing to do it, it costs you a little bit of money on the upfront. They do give you a credit on your homeowner's policy. It's probably never going to offset what you spend, but if you add the $2,500 in, or say $1,000, whatever an insurance company is willing to do, it adds up.
Excellent. Well, it doesn't look like we have any initial questions from anyone. So I'm going to go ahead and just switch myself over. Here's the spotlight video. I do want to thank everybody for joining us. We really do appreciate it. We hope that it's valuable for you all as well. Just a couple of final notes here. If you do have further questions or would like to talk to Mark or someone else from the Stonebridge team, please give us a call at 651-251-1000. As a reminder, this presentation has been recorded, so I'll be sending this out later this week to all of you. Thank you for joining us. We do look forward to seeing you at our next Wealth Planning Series episode, which should be coming here sometime in December. Thank you all for being here, and have a great rest of your days.
All right. Thanks, Patrick.
Thank you.